Hi, I'm David Penn, Research Analyst with Finovate. We're here at FinovateSpring in San Diego, and joining me is Jim McCarthy. He is the founder and chairman of McCarthy Hatch. Jim, thanks for joining us.
Absolutely, thanks for having me.
Now, you're fresh off the stage, gave a very, very interesting presentation for our audience a little bit a minute ago, and I thought maybe we could start with you introducing yourself a little bit and telling us a little bit about McCarthy Hatch.
Sure, my name's Jim McCarthy. I've been in banking since 1989. We've seen a number of cycles in that period. I've spent years at the FDIC, closing banks in the banking crisis, and then I was called out to Washington, D.C. to start the Consumer Financial Protection Bureau in Washington, D.C. I've since left then. I've spent some time at KPMG and some other large companies, and we came up with this idea where we can provide consulting services and technology to the large banks in a way that is more surgical or more beneficial to those organizations than I could being at a KPMG or somewhere else. And so we have a product that predicts risk in the marketplace from a consumer perspective, and the banks love it.
Yeah, fantastic. Well, one of the things that you talked about, or actually the theme, I would say, of your presentation had to do with the Trump administration and its potential impacts on policy and things like that in financial services. One of the things that I've heard quite a bit, and it actually came up in your talk, was a lot of folks are seeing the first 100 days of the administration through the lens of deregulation. The idea of you have a Republican in, deregulation is often a popular policy among them. Is that how you see this? Is that the appropriate lens to look at what's going on right now as a deregulation sort of movement?
Absolutely.
Okay.
Fully deregulation. So there is no appetite for regulation or enforcement from the Trump administration. It's created an environment where across all services, regulation has been halted. And so that's the environment we're in. That's the reality we're in today. Now, it's important to know the regulations are still there. You still have to follow the regulations, but the gatekeeper is gone. And that gatekeeper will be gone for a period of time. A gatekeeper will come back in the future, and that new gatekeeper can look back in time to see if you harmed consumers. So it's very important during this deregulatory time to follow the regulations. There are opportunities, we should take advantage of those, but our responsibility remains the regulations.
Absolutely. That's a very interesting perspective, and I think an important one, not to see the present as a permanent future, but that things are going to change and that institutions need to be mindful. As you said, the regulations are there, whether or not they're being enforced as we might prefer them to be or not. Speaking of that idea, one of the things that you brought up I thought was very interesting was the idea of what happens to consumer protections at a time when regulations are not being enforced. And certainly with your experience with the CFPB would be something you'd be able to speak to. Is there an opportunity, for example, for other actors to step into that breach and to provide consumer protections that the government may not be providing as vigorously as has in the past?
Well, that's what the speech was about today, right? It's our responsibility. It's our responsibility as innovators to ensure consumer satisfaction and fairness and transparency in our products and services. And what we see today in the fintech industry is stepping up to that responsibility. And so it doesn't take regulations to provide safe consumer products and services to the United States citizens. It takes responsible companies that understand that their longevity is dependent on treating customers fairly. And one of the best ways to do that is to listen to them.
Sure.
Listen to them. When they're saying that something is wrong, pay close attention to that.
Right. I'm thinking from an industry-wide perspective. One of the possibilities in an environment of less regulation is more M&A activity, for example. That might be a more permissive thing that the government's going to let happen. Do you see that happening in financial services? And if so, do you think that on balance it's a welcome change if it does take place?
I think it's an absolutely welcome change.
Okay.
And not only will we see an increase in M&A activity, we'll see an increase in acquisition of those banks from fintech companies. And I think the purpose, the motivation of those acquisitions are positive for the industry. There are 5,000 banks in this country, right? 98% of the assets sit in the top 5 banks, right? So that's a lot of banks in the country. And so if we're going to move into automation, if we're going to move into embedded finance, a lot of those companies struggle reaching those products and services, and acquisitions are the way to do it. And so I see it as very healthy. I see it as non-disruptive and a great opportunity for the banking industry to consolidate in a more efficient manner.
Excellent. In your comments today, you made a lot of interesting points across the board, covering a lot of different sorts of issues. And I just wanted to ask, maybe a way of wrapping up, what is the most interesting thing to you about this moment that people maybe not talk about as much?
The resistance.
Huh?
The resistance to the dropping of the regulations. So the top banks in the country are my clients. Periodically, I get called in to say, what do we do? And when you speak to them, the message that I give them is status quo. Don't change anything. If you have capital investments in 1071, you may want to look at that, right? You may want to pause that. If you have capital investments in 1033, you may want to pause that, but stay the course. And so I see it as some of the resistance. Large banks like structure. They operate better in structure. And when that structure fades, they're not comfortable. And in that uncomfortable space, there is risk. And so we see the large banks holding the line on their compliance spend and holding the line on adhering to the regulations and waiting for those spends to take them whatever direction that's going to take them in the future.
Yeah. Very, very interesting stuff. Well, again, I really enjoyed your presentation. Really enjoyed this conversation as well. Again, very constructive, I think, and some things that we can really be looking forward to, and maybe inspiring some of the folks in that room to really do the work that they really need to be doing.
I hope so, right? I hope that everyone got the message that they're the ones carrying the ball now.
Absolutely.
So we'll see what happens.
Fantastic. Well, thanks again for joining us.
Hey, thank you very much.
You
I
bet.
appreciate it.
And thank you as well.